Tax season shouldn't feel like a last-minute panic attack, but for most business owners, it does. And 1 in 3 business owners ends up paying more in taxes than they should just because they were unprepared. So how do you avoid that feeling, that panic of where did all my money go? So most people think that taxes are something that you just deal with once a year. And a lot of times they don't put any planning into it. But the businesses that are actually able to pay the least amount in taxes are the ones that have been planning from January 1st. And I don't mean January 1st of next year. I mean, this past year, they've been looking at their taxes, knowing what they owe for the entire year. Let me guess. You have been so focused on running your business that taxes aren't even like a thought in your brain. And that's not uncommon. So that's what we're here to help you with. Tax planning almost always gets pushed to the back burner. And a lot of times, like, even if you're tax planning, it gets pushed to October, November, December, somewhere in Q4, which is fine, but that's not the ideal time. You need to be looking at it across the entire year so that whatever may come, you know you're prepared for it and you can take whatever action you need to in Q4. Don't worry, you're not alone. We're here to help. And I'm going to give you a couple of steps to help with this. First, you want to get your books organized now. And that doesn't matter what time of year it is. Your book should always be organized. So that's kind of like that saying, when was the best time to plant a tree 20 years ago, but when's the second best time now? The same is for your books. It's great if you've had your books organized since day one, but probably unlikely. So the best time to start is now. And the closer you are to the beginning of the year, the easier it is to make sure that your entire year is set up correctly. Disorganized financial records can play a huge part in not actually knowing how much you're going to owe in taxes and not being able to plan for it. If you have a good CPA, they're helping you with that tax planning. But if you just have your kind of run-of-the-mill tax accountant that's going to file, they're just taking the information that you're giving them and plugging it in. So they're not actually helping you plan for some of these things ahead of time. I want you to make sure that you have your reconciled bank accounts done monthly. And what that means, make sure that your bank statement matches what's in your bookkeeping software. So if you're using QuickBooks, there's a bank reconciliation tab. You can go in there and just make sure they match. You want to categorize your expenses properly, making sure that they're going to your profit and loss in the right spot, because that will help you make a lot of financial decisions. And then make sure that all your invoices are accounted for. So any revenue that you've brought in, make sure that there's not any just hanging out, especially if they've been paid. You want to make sure that you're recognizing all the revenue that might come in. But on the other hand, if they haven't, it's going to filter through to your accounts receivable and make sure that you can collect on that money. Okay, so the next thing that you want to look at is your deductions and what's available to you before it's too late. So here's some common deductions that you might want to look at. Do you have a home office? Do you have equipment, software, and business tools that you're using? Do you have any vehicle expenses? A missed one that we see a lot of time is any mileage. If you haven't been tracking your mileage, then you might be leaving money on the table. Now, there is some caveats there. You can have your gas be an expense. If you're fueling up on a company car, you can't also track your mileage, but it may be something that you want to look at as far as depreciating the vehicle. Also, making sure that all of your employee wages, subcontractors, contractors, that they're all flowing through correctly. Some, depending on how the expense is labeled, you might be able to claim more expenses of things. Think of meals. Like if you have a personal meal, it needs to not be on your company card. You brought food in for the office, that's a different deduction than if you're traveling. So knowing where to put your expenses on your P&L can actually help with your deductions when you're doing your taxes. Here's the thing that everybody hates doing is setting aside money for taxes, because you're looking at that and it's like, this is my money, right? But it's not. You need to be sure that you're setting aside the right amount for taxes so that, one, it actually makes it much easier to write that check in April. But also, two, if you do need to pay quarterly taxes, you're setting that aside and making those payments on a quarterly basis, and you're not having to scramble each quarter to come up with that. Let's say that we're able to get you some tax deductions that you weren't sure of. That's just money that you've been saving, hopefully in a high yield savings account, and earning a little bit of extra interest on that whole time. But you don't want that tax money sitting in your operating account and being kind of commingled with the rest of your funds, because if you use it to pay expenses, the IRS is the worst expense to have. You don't want to owe them. The general rule that we like to stay by is setting aside about 25 to 30% of your net profit into a savings account. And the reason that we go with that is generally 25 to 30% is going to cover most tax brackets, right? So at the highest, you're going to be paying 30-ish% in taxes. You want to have that set aside. And that way, if you owe less in taxes, you actually get to keep that, but you are not shortchanging yourself at all. 30% should cover anything that you owe. Let's say that you're getting towards the end of the year and you know that you're going to have a huge tax bill. But you also know maybe you have a vehicle that you need to be purchasing in the next 6 months. Now might be the time to do it. Or you have a piece of equipment or a trailer, computers, something like that. You need to make an investment into some software that would really help your business. Things like that are a great expense to have in Q4 if it's gonna, kind of skyrocket your next year, but also reduce your tax liability. The last thing that we really recommend is having a really good tax CPA, somebody that's great at tax strategy, to help you not only at tax time, but throughout the year. I always recommend that you meet with your CPA at least twice a year and not just at tax time, not during the tax season, but sometime like May, June, you want to meet with them to see how current year-to-date totals, but then also around October, November, so that you can, if you do need to plan for some of these purchases, that you have the time to actually do them. If you make those purchases after the beginning of the year, it's already too late. So hopefully we've reduced your stress about tax season. So let's talk about another major challenge that business owners have. Marketing. You're putting in the effort, you're running ads, you are making those calls, but maybe it's not working. Maybe the sales just aren't happening as quick as you think. This is a great time to evaluate your return on ad spend, your ROI on your marketing, and we'll talk about that in the next video.